Now, Economist Dr Nataliya Ilyushina, thank you for your time. We've all had a day or so to digest the RBA board notes and the comments we heard from the Governor, Michelle Bullock, at her news conference yesterday afternoon. What was the big takeout for you?
Hi, Ashley. And yesterday was a very anticipated announcement was delivered by Reserve Bank by rate cut, but we shouldn't be too excited because that's just one. The language of the governor was very clear to not expect any more rate cuts, even though the market anticipates another 3 rate cuts to go. Another important thing is that this decision was made on the margin. The inflation is not yet in a target range. However, Reserve Bank governor pointed out that the trend indicates that we will reach it in the future. However, this is very unusual for the Reserve Bank to make decisions on the predicted values, not the values that are already achieved. In addition to that, there is a lot of uncertainty, both domestically and internationally. We don't have the election date in Australia. We have an ongoing raft of new fundings coming from Albanese government, and the extra fiscal policy, extra spendings, they always had high risk of undoing any movement of Reserve Bank. And another thing is, of course, what's going on in the United States. We still don't know what impact of Trump tariffs going to have on Australian economy, because we still don't know how many of them going to happen and how the global economy will react, because tariffs are usually inflationary, and whether that inflation will spill into Australia. So I am generally surprised about the rate cut, because Michelle Bullock seems to be really cautious in her moves. But of course, as a mortgage holder, I am very happy about that.
So considering everything you just took us through there, when do you expect we'll see the next cut, and how deep do you expect upcoming cuts to be? What sort of ballpark do you expect the cash rate will be in by the end of the year, for example?
I wouldn't expect it till another rate cut till the end of the year. But the reason is why there is so much uncertainty around it is really Reserve Bank doesn't have a magic wand to undo everything that's going on in the economy. I do think we place too much emphasis on what a Reserve Bank can do. What Reserve Bank interest rate changes are doing is changing what we're able to spend as a consumers and businesses. But the problem is that currently inflation is largely driven by the supply side of the economy. In other words, productivity. And that's what Michelle Bullock yesterday mentioned, that we need to see how supply side of the economy performs. And that's a lot more difficult policy question, how to improve productivity. And if we look at the figures, labor productivity per hour fell by 0.8%. GDP per capita fell by 1.5%, and Productivity Commission claims that there is 3.7% labor productivity fall. So unless we fix the productivity, we will still have too much money compared to the things we can buy. So inflation will continue go up until we fix that side of the economy.
Dr Nataliya Ilyushina, I really appreciate you making the time. Thank you for your insights.
Thank you.